One time for the underdog. One time for the underdog. You got the world on your...
Hey guys, welcome back to another video. For those of you that don't know who I am, my name is Elvin, and I'm a trader and mentor at FX220. I'll also be providing trading analysis, lessons, tips here on YouTube. In this video, we will show you how we use the moving average indicator to consistently win every trade that we take. Alright, let's get started. We're on the 15-minute time frame, and I'll show you how to get the moving average indicators. We go over to indicators, type in moving average, and we use the moving average exponential. Once you add it to the chart, you have to go into the settings and change the length to 50, and you change SMA to EMA, and you click OK. And you do the same thing for the 200. You change the length to 200, make sure it's on EMA as the method, and you click OK. And this is how you get the moving averages. The blue is the 50 EMA, the red is the 200 EMA. This isn't a moving average strategy. We use the moving average to combine with other rules in order to have a higher probability of winning the trade. What the EMAs do, it helps us identify bullish, bearish, sideways trends. I'll show you a few examples from the live charts and do kind of a back test, that way you can see how we use them in our strategy. The market moves in waves and cycles, also called the market maker cycle, which causes the price to trend in certain directions and reverse from certain points. As you can see, this is a market maker cycle. We have a first wave, second wave, third, fourth, and fifth wave. I'll talk about this in another video since we're concentrating on the EMAs. Market moved up, the fifth point of the market cycle, it came down and broke this structure. So we can expect it to reverse from here, or it'll reset and just keep making another cycle. Price will come and start closing below the 50 EMA, and you'll start seeing the EMA start to cross. If the 50 EMA is below the 200 EMA, we'll only be looking for sells. If the 50 EMA is above the 200 EMA, I'll be looking for longs. You will only look for buys if the 50 EMA is above the 200, and you will only look for sells if the 50 EMA is below the 200 EMA. After price presents you with an EMA cross, it'll coincide with the EMAs and give you a pattern. Sometimes we'll get breakouts out of the Asian session, sometimes they move sideways, but we wait for price to coincide with the 50 EMA. We want to get, if you're going short, you want the M formation. As you can clearly see, market went, came down, up and down, and that's when you got the M pattern formation. We will enter after confirmation below the 50 EMA. This is our signal to go short. We usually go for a 1-to-1. There are other criteria in our strategy before any entry. We always make sure you're not trading around the news. Key levels. We also use the fibs. It's different rules that we have in our criteria to guarantee that we'll have a 100% winning trade. And then after you have the pattern formation, you might have the same thing again multiple times a week. As you can see, Asian session broke out, London session, and it gave us a perfect M pattern formation. Close below the 50 EMA, and this is our signal to enter short. Stop loss at the high, 30 pips. Take profit, 30 pips as well. If you want to trade, swing trade, you can go for a lot more, especially if you enter right after EMA cross. The market will trend for a long time. You can catch many pips. But like I said in previous videos, I like to just get in, get out, trade with larger lot sizes. I don't like holding trades too long. Give you another example. Market starts to close above the 50 EMA. gives us an EMA cross, and then you start looking for a setup. On this day we don't see anything clear, but here you can see Asian session give us a nice W formation. I'll show it right here. Strong close above the 50 EMA. This will be your signal to go long. Stop loss at the low. Take profit. You can either go for a 1-to-1, or as you can see, you can go for more, 1-to-4, until you see a reversal. The next day, another W formation. I'll highlight the Asian session. Broke out to the downside, came back up, made a W, enter right at the confirmation candle. Stop loss at the low, 30 pips, take profit, 30 pips. Or like I said, go up for more. This happens every week. You can be very consistent trading these patterns around the EMAs. You just have to be careful and consistent when it comes to the other rules that we have in our strategy. Some might see this right here as a head and shoulders pattern, and I'm sure some might go short right here, 30 pips or even more, 40 pips. We had a directional move, EMA cross, and a head and shoulder formation. Why did this trade lose? We can review that. This is the 21st. So we're expecting the pound to be weak due to dollar strength around this day, but it didn't, even though we had a signal. So on this day, let's check out correlation. How was the USD? Was the USD weak or was it strong? So you want the pound to be weak and the US dollar to be strong. We'll look at the USD CHF on this day. As you can see, we took the trade around here. The US dollar 50 EMA was below the 200 EMA, indicating a downtrend. So the USD CHF is weak. Let's look at the USD CAD. On the 21st, this is when we took that short on GBP USD. It's also in a downtrend. USD JPY, same thing. It also had an EMA cross, 50 EMA below the 200 EMA, indicating a downtrend. So we see dollar weakness. We're not going to go short on the pound USD when the USD is also weak. So this is not a valid setup. We will have prevented this loss by not taking this trade. This is how you keep your 100% win rate. You only take the valid, easy setups. For example, these trades here, Tuesday and Wednesday. How was the USD CHF? We compare. It was weak. You can see the dollar is weak, so we went long on the pound. USD JPY that day going downtrend as well. That's how you get perfect correlation. That's how you win every single trade. That's all. It's simple. Just waiting for the EMAs to cross and give you a pattern formation. And before the entry, you go through your criteria, make sure everything matches. Directional move, EMA cross. We had a W formation here. Check correlation before any trade. So that's Thursday, GBP up. Let's look at USD on the 14th. It's going down. So you want to trade a strong pound and a weak dollar, US dollar. You know, USD CAD going down, dollar index going down. So the dollar is very weak, so we went long with the pound and guaranteed in the money trade. We had our W formation, enter after the confirmation candle, stop loss at the low. You could either go at the low of the setup. Sometimes I try to go even a little lower to closer to the EMAs. Well, let's say 30 pips. You can go for a 1-to-1, 30 pips, or go for more. You can see a 1-to-4 risk reward. It's a systematic approach that we use to trading. There's no guessing. Anyone that trades this setup will know when we take the trades. I can tell you I took a trade on Thursday. You'll look at the chart and know exactly when I took the trade because you see the setup. I say, oh, okay, I took the trade on Tuesday. You can see W formation with a strong confirmation candle, then we went long. You know exactly when the entry is after the candle. You know exactly when to put your stop loss and where to put your take profit. You can do this over and over again every week for the rest of your life. Make these consistent gains. Very easy. You wait for the confirmation, you wait for the setup, you wait for the EMAs to cross, and just trade with the trend. It's a combination of tools and resources that we have to win these trades 100%. You don't take every single trade that you see in the market, you just wait for the right ones. Sometimes the EMAs cross multiple times. This false EMAs, false moves. You can go back. This was the news. Sometimes you see these big moves. You stay away from them. You don't want to trade these big moves. You want the clear, easy ones. You don't want sideways markets either. You want the clear, easy setups. We had a pattern formation here. There was probably news that came out which brought the market back up and then went down again. The market makers will make these moves. You'll have a breakout of the Asian session. A lot of traders, they're not even looking at the EMA, so they'll just go long. They see a breakout, they'll go long and expect the market to go up a lot higher. But they don't know that it's still a downtrend. The E50 EMA is below the 200 EMA. This is something that we use to know. I'll create a series of videos going into more detail for each step in our checklist. I'll explain why we use them, how we use them, and how it can improve your trading. But that is all for today. If there's something you don't understand, anything you would like a little bit more in detail, send us a message. Write it in the comments. We're available on Instagram, Facebook. But once again, thank you very much and good trading.